Righto, g'day money miners. Jeez, hope everyone enjoyed the Rusty and Cav chat. Jeez, didn't that go off its head?
I like
cracker.
I like the idea of putting two, pretty clear thinkers together in a room and just letting them make the content for us, mate.
More to come. More to come. Right, what have we got today, boys?
Got a belter today.
Yeah, a bit of catch up from the last couple of days. Liontown's funding package. We're going to go through that. Mate, Arafura getting the big check from Albo. Oh, tell you what.
Elbow. When you say Liontown and then elbow, I think Albemarle, but no, you mean the government.
That Albo.
There's some strings attached, mate. I'll get into that.
Pilbara selling a bit of spod for a decent price on the old bike auction. Bit of rainfall. Rainfall is hitting the bloody gold mines. I'll tell you what, Trav, you're going to go into the new trend of the re-emerging trend of exploration targets.
Oh, mate. I love it.
Mate, that's all you got to say, mate. Syrah's equity raise. Mate, Copper doing a bit of green action today and a bit of Glencore activism against Glencore.
Yeah. Yes, mate. What a day. Well, I can't wait to talk about it.
Yeah.
Where should we start? Liontown?
Mate, bit of sad news, actually. I just want to mention thoughts with all the workers, family and friends in Ballarat. There was an underground incident at one of the gold mines there, which saw a 37-year-old miner pass away. So miners, stay safe above and below ground and thinking of yous all in Ballarat. So,
Absolutely.
Boys, Liontown. On the back of earlier this year in January when their 760 mil debt funding package got pulled, we've been waiting to see what the revised smaller debt package will be, and it's finally here. Got announced yesterday. So they've received a commitment letter for a reduced facility of 550 mil, which goes up to 590 mil with capitalised interest. Apparently, it's the first commercial bank debt provided for a greenfields lithium mine. But hey, there hasn't been shitloads, has there?
No, and it's not like a straightforward, like project finance facility. It's more of a bridge facility as well. So
yeah, we'll go through that. Because
to underline what you also said there, Matty, commitment letter, just like last time. It's not in the bank account just yet.
Yeah, she hasn't. They haven't got the BSB and account number yet and transferred it. So because Westpac, ANZ, and HSBC withdrew. They were in the prior syndicate. So this syndicate they got now is Combank, NAB, SocGen. They're the commercial lenders. Then a few couple of export credit agencies and a
Clean energy
fund, yeah. So because I've heard one of the lenders that pulled out had concerns over doing a battery metals debt deal in this market, and also had uncertainties about the underground performance, which neither here nor there. But one of their specific concerns was the use of spodumene tailings in the paste backfill, which to my knowledge has never been done before, because I know they've put a regrind on the end of their processing plant to grind it down fine enough to be used as paste backfill. But as I've mentioned before, that won't impact the commencement of the mine. They'll just be ripping everything out of the fresh levels. The issues come down the road, which could be 6, 12 months, don't know the mining schedule before they're really dependent on paste performance and the fill rates to maintain this 3 million tonnes. So,
Matty, the fact that those banks pulled out those three, that probably tells you, a little bit of insight on why the lending syndicate kind of fell apart previously. Which where were the points of fatigue in that syndicate? Well, it was probably those three banks. But to your point on the concern potentially around the pace fill, what are your thoughts on this? How do you think about this as an underground miner, mate? Are those concerns real or not?
Oh, yeah, most definitely. It's all uncharted territory. Like paste is paste. I think it's if you can grind it down and there's plenty of people studying, I'm sure, how to bloody make it work.
Yep.
So, because I mentioned before we get into the debt, well, why don't we go on a bit of an underground mining journey, guys?
I love it.
I'll draw up a couple of things because I've talked about how when they take the primary stopes, the first ones, they're not dependent on paste, and then they mine the secondary stopes. So the non-mining people might know what I'm talking about. So I thought I'd draw some pictures up for the crowd. So the first one here, that's just, say that blue bits, that's your big spodumene ore body. This is just a bloody drawing example. This is not what the Liontown thing looks like, but I know they have some big thick sections that are going to be paste backfill. So those grey things are the development drives going into it, the jumbo drives.
Yep.
So then what they can do is they split them up into, say, 20, 25 or 30 metre sections. They're the stopes. So the first one you see here, the red ones, they're your primary stopes. They're the ones they can just go get and mine out. But once you start, you mine out those middle two and say you're mining the edge ones, you've got to fill those first two with paste fill to then access that one in the middle, the one in yellow here for the YouTube viewers.
Yep.
And then you've got to actually fill the two outside ones before you can then access, mine out those other two, because you can't mine against an open void. You got to mine against the paste. So that's what I'm saying, when it won't affect them initially because they can go get all the primaries early on multiple mining fronts, but then eventually the schedule gets to a point where you're relying on the paste to be filled in those primary stopes to then access the ones there, and it sort of flows on from there. So not an initial concern, but it can really catch up to them. You can have like a nifty situation where fucking hardly anything was filled and it fell in.
And you're mining, like the rate at which you can mine is constrained by the rate at which you can backfill.
Well, you need to be mining at a high enough rate to feed the processing plant to then spit out the tailings to then feed the paste.
Yeah.
So, and then if you haven't got the stopes ready because you're waiting on paste, you can't get the ore to put in the paste, the processing plant to make the paste, and it's then you have to get you have to start chucking bloody cemented rock fill in to catch you up, because it's a big circular bloody chain.
And what was the concern of the banks? It was
so I'd say because paste notoriously, like, because there hasn't been really an underground lithium mine to my knowledge, or so tailings have always come from like a gold mine or a nickel mine or a copper mine or something like that. So the properties of those tailings and if you mix it with cement or a binder or something like that to create the strength of the paste, there's a lot of, metallurgy and stuff involved in that to make it work. So it has
the main property is you just need it to be like the
you need it to be a certain
enough.
strength.
Yeah.
Like it's like a cement. It needs, if it's too weak, it'll fall in when you blast against it. And then you need it to be able to flow through the paste pipes adequately. So because if it doesn't flow good enough, it'll bloody block up, and that is a big ball of fuck that I've seen happen. So it's just adventuring in that territory of the unknown. And mate, you can study the living shit out of it.
Yeah.
But till you do it, issues can arise.
Happen,
So that's just, mate, doesn't matter how bloody hard you work on anything, unexpected things can pop up. So it's just not saying it's not going to work. It is just a risk that needs to be accounted for when you're lending hundreds of millions of dollars to a company. So that's obviously a risk that they saw.
So flowing on from that, Matty.
Let's get back to the finance, boys. Sorry to take the floor off you. I've got to bloody get me fix every now and then. JD.
No, I think that's very much a part of what's still to come, because there's still conditions precedent to the money being, given over to Liontown. And one of those big conditions is that an updated mine plan comes.
Yep.
And then you've got another, another condition being the latest models to be finalised. That includes pricing. Now, that was obviously a big point of contention when the initial financing was pulled. Mm-hmm. So these things still need to come together.
And OPEX needs to be validated by an independent technical reviewer.
Exactly.
So simply, they have to have a model that says this amount of debt will sufficiently fund you through this period.
Yeah, there are certain metrics, like certain debt metrics that will need to be, below a certain threshold, given these independently verified inputs for the OPEX and CAPEX and price deck, which are your drivers of those metrics.
So Q2 of this calendar year and the coming quarter is when we are expecting revised OPEX and CAPEX figures, which we're looking forward to. And just on the terms of the repayment, the previous one was for 5 years off the top of my head. This one is much shorter, to be repaid at the end of October 2025. So
1.5 years.
Yeah.
So as you said, Trav, it's essentially a bridging loan. It's not a long-term debt solution. They'll be looking to refinance this hopefully.
Yeah, and hopefully, before that maturity, you've got enough signs to demonstrate that positive cash flows nearby, and future lenders might have a lot more comfort than the current lending syndicate, given the novelty and et cetera, et cetera. But or maybe the Liontown shareholders will get their wish and Gina will come knocking, and you don't have to worry about a refi. But these are all possibilities.
Oh God, we'll talk about that in the round table in a minute. So I guess if they don't get that updated mine plan and the cash flow model in by 31st of July 2024, she's not a done deal till then. That's the big thing. So it's not like it looks all promising at the moment, but there are conditions.
Yeah, CPs, mate. CPs to be met. Totally. And if those CPs aren't met, then what's your base case under that circumstance? Yeah, my base case would be if they couldn't meet the CPs, they'd announce that to the market simultaneously with an equity raise for the difference and keep the forward facility. Wouldn't you do that? I don't know if you guys would do that.
I don't think you'd have much other choice, would you?
Yeah.
A rock and a hard place.
So that means they'd have to equivalently raise $250 million. Yeah. Because you'd keep the forward facility, the 300, and then 200, 250. Yeah.
Alrighty, so let's get into the talking points, right? The big talking points. The first one that comes to mind, assuming that they get the financing right, is the refinancing. Like we said, it's only a year and a half, and there's fairly consensus view. Not every analyst, but a lot of analysts are thinking they won't have the capital to make that bullet payment in October of next year, so they'll have to refinance debt, preferably over the equity option, which you mentioned there.
I think I looked at the Jarden note. They pretty much said commissioning will have to go better than all previous peers, and spod price would have to be well above $2,000 a tonne to meet that bullet payment.
Yeah, I don't think you look at this facility and think, you're going to repay that bullet with cash flow. You do. Your base case is you want to refi it. And in all honesty, like if they get this facility, like the interest rate they're paying on it is actually pretty cheap. I was surprised.
BBSY plus 4%.
Yeah, which is pretty cheap for a bridge facility, which is a positive sign, all things considered. If they can satisfy the conditions to draw it down.
There's one thing they got up their sleeve. What if they sold Boldania to a MinRes?
Yeah,
or something like that.
Yeah. Where's MinRes get the money from?
They got fucking shitload. They got $3.5 billion debt. Another bloody 100 mil wouldn't hurt them. Or someone of the like. Who knows? But that I wonder if that's a little ace up their sleeve they'll act on.
Yeah.
I'm sure it'd be something they explore. Absolutely.
Yeah. Now, here's one. Do you think that like where Liontown's ended up now on this journey and like going into an infant commodity in a way, or an infant material, whatever you want to class lithium. Like it was in the mania for a long time, and they were absolute market darling, and obviously done a great job getting this project constructed. But do you think they got greedy and should have explored offers from Albemarle that were those ones between, was it 220 to 250, around that range, and it dragged on for a while to the $3 bid, and then Gina got involved and then the prices have crashed.
Yeah.
But do you think they could have executed something a bit sooner?
Hindsight is 2020.
Took the words out of my mouth.
Yeah. And the word on the decline was that, Gina, the moment there was an Albemarle bid on the table, Gina, put something on the table as well that might not have always been rinsed to the market. But and under those circumstances, at that point in time, you didn't necessarily know that Gina might be a foe instead of a friend. And so sometimes you might be sitting there thinking, oh, geez, I've got competitive tension here. I'll play them both off each other and so get the best possible outcome. But it didn't work out that way. So like, heck, I remember when I first read they declined 2 offers when the third one was revealed, and I thought, fuck, I'd have accepted that third one. So yeah. But I don't know. Without having the full context of what those discussions were and how they came about, it's a challenging thing to be adamant that yes, you should have done things differently. But it looks like they should have.
It looks like they should have. Yeah. What about looking at this 3 million tonne per annum option now, rather than accelerating towards the 4 million tonne per annum? Interesting to weigh that up against what was and what is now. So is it a good option at these prices? Because I guess the 3 million tonne option, you're spreading out the development capex and the opex via, because you're not accelerating the development to access the ore bodies as quickly, because they won't need as many mining fronts to go, because to go from 3 to 4, you need additional areas. You need to get there quicker. Like what we saw Bellevue, when Bellevue said they got an extra jumbo to get the Tribune side going quicker. That's what Liontown would have to do. You need more jumbos, get into more areas, extra areas to get that extra feed. So less jumbos, less money, less risk to hit nameplate mill capacity.
Yeah, less complexity is also an important point.
Probably
there
not
too.
the worst thing, but your unit operating costs will be higher for the processing at the 3 million tonne. And because from what I hear, like to go from 3 to 4 million tonne was a bit of a small incremental lift, because all the frigging legwork's done to get to 3 million. So it's not heaps to go from 3 to 4 million, but it probably does take a bit of pressure off the operation. Right. So it mightn't be the worst thing.
Yeah,
but
the unit costs, like you say, are the thing to watch, because keep in mind they've executed a bunch of contracts under the expectation it would be 4 million tonnes per annum. Now, how many of those contracts are set up in such a way that they'll be in Liontown's favour on the readjusted mine plan, or are they going to get stung for a lot of them?
Favour.
Yeah, they might get stung with all these adjustments.
Yeah, and I guess because I see Kathleen Valley as a big litmus test, I believe, for all the potential other underground lithium mines, because I guess Liontown's the best one going around. 1.4% lith, very thick. Andover might be an underground mine. We don't know yet. I haven't even got a bloody mineral resource, so I don't even know. But you look at, if you're talking grades, like MinRes, Mount Marion's 1.22%, Delta Lithium's Mount Ida, 1.2, Develops Pioneer Dome, 1.16, lower grade, a lot thinner. I guess everyone wants to see whether Liontown can make good chunks of positive free cash flow at these lower than anticipated lithium prices that they initially thought they'd be doing in a higher cost underground environment compared to a lower cost open pit. So, because if they struggle to make money, all the other potential underground lithium miners going to think, fuck, this is a bit risque.
I think you're dead right, Matty. Of the ones you mentioned there, these guys have the scale, which, brings down the unit costs. So if they can't make it work at their grade and their scale, it'll be,
tough going.
Tough for the others.
I suppose the difference is, like, if you look at Mount Ida and Pioneer Dome, they're much narrower. So I'd assume that they would be just mining stopes, leaving pillars like a normal thinner ore body. So there's no capital for a paste plant. You can mine it quicker because you're not interacting with the paste, and it might be a slightly lower operating cost. I'm not sure how much operating cost you add to run a paste plant, because you do need more people and retic and that side of things. So don't think it'd have a massive impact on the operating cost, but it would. So I don't know if that'd offset some of the difference in grade and scale. But yeah, a lot to wait and see. Yeah, I love that. Love this shit. You got my eyes on it. A new underground mine.
I love the education lesson, Matty. Well done, mate.
Mate, do you love the passion too? You can tell I'm so passionate about underground mining. I love it. Mate, there is one other hope for Liontown. Now this is a bit out there. Baldonia's one ace up the sleeve. Okay, think of where they are. Think of the close operations. IGO's Cosmos Nickel. You got Bellevue Gold. You got BHP's Mount Keith. So we've got lithium. They got nickel and gold. Why don't if they could take some tricks out of the Luke Cray playbook for some cash, sell off the non-lithium rights to the tenure, bring in that cash just like Orabanda have done. That could be help used to get this bullet payment sorted. Do they have any non-lithium rights that they could sell off?
Non-lithium? I don't know. I actually don't know. Yeah, I'm sure they probably do, but are they of interest?
If they do, if they don't,
probably not worth much.
Sounds like they need the help of Seamus Murphy at any time exploration to find these non-lithium parts of Kathleen Valley. Mate, start an exploration campaign with the help of Seamus at any time. Mate, this could get him out of the shit. He's got the workers. He's got the exploration equipment. He's got the geological consulting service to help find the targets. He can do the soil sampling. Mate, he can get the best rates for the drilling contractor, do the core cutting and the storage, mate. He can pump out the mineral resource estimate. I think Seamus Murphy and Anytime Exploration might have the solution for Liontown to get this bullet payment done in time without an equity raise or even a refinance.
It was one of the conditions precedent of the debt facility from the commercial banks, mate. It was
you have to explore the option of engaging Seamus Murphy and Anytime Exploration. So once again, we are handing this onto a platter for these big mining companies. Pleasure doing business with you.
You couldn't make it easier.
Yeah, Jesus Christ.
The turnkey solution. Just call them up.
No wonder we've got so many listeners. It's because all the companies are listening for actual just company advice. Yeah. Did we mention before, we already mentioned we said it at the start of the show. Pilbara Minerals sell the old BMX bike auction.
It was before the auction. So, I mean, the auction was scheduled to occur on the 18th, which is 4 days from now, but they received a number of pre-auction bids, one of which they couldn't turn down. The implied price for 6% spod con is US $1,200 a ton in this.
I suppose the bike auction's always been notoriously higher than the spot price.
Yep.
But still, people are paying it,
even
though it's 5,000 tonnes. So so they're getting 1106.
Yep, for the 5.5.
For the 5.5 they're selling. So good on you, Pilbara, mate. Arafura.
Yeah, mate.
What's happening here? God, rare earths in the doldrums.
There's some real analogues between this story and the Liontown story in some ways. Kind of commitments that still have CPs outstanding from a debt perspective. Gina as a big shareholder, big parallels, mate. But bloody Arafura, I didn't see this news coming, by the way. Took me by complete surprise, and when someone posted it in the Hoodaroo group chat, I think I replied like, "What the fuck?" Holy shit! It was baffling to me. But rare earth developer Arafura, they're up like 46% intraday today on the back of federal government commitment to help finance their Nolans rare earth project. Before I go into the details of on why this has stumped me, I'll rattle through the details of that funding package. In total, US $533 million of conditional funding agreed by the Australian government. The funding is to be distributed amongst both EFA, which is Export Finance Australia, and NAIF, Northern Australia Infrastructure Fund, in various tranches of senior and subordinated debt. I'll flash up the table of it up here if you're interested. Importantly, EFA, they're the government organisation that administers the $4 billion critical minerals facility. And if you guys remember, that critical minerals facility is like the one that was used for any other rare earths as well.
Should they rename it to the rare earths facility? Because it seems like the whole thing is going towards rare earths.
There's a couple other things, but yeah, you're
big
right.
Chunks of it.
The big checks have definitely been rare earth.
Hell.
Yeah, and so so there's $325 million of the debt package today is coming out of that critical minerals facility. There's no mention of interest rate or anything like that in the announcement today, but we do see like the generous 15-year tenors, which are you come to understand a commonplace with these with the critical minerals facility.
Non-recourse, eh?
Limited recourse, this one. I mean, any other one was non-recourse. This is limited recourse, so it's not the same. And the any other one was like a done deal, whereas this one there are conditions associated with it that need to be satisfied still.
Yeah.
And when I say it's not a done deal, it's conditional, right? A bunch of CPs, they explicitly mention one of those conditions precedent being due diligence. And I dare to guess another one on top of that would be completion of the rest of a funding syndicate, including equity and the other lenders that need to come to the table in order for it to complete. But due diligence is a big one. Like, you can write anything subject to DD and then just say it didn't pass DD. So that's why I kind of take it with a bit of a grain of salt for now. But it baffles me because it's a big bloody CapEx bill.
It's huge.
It's massive.
Huge.
The last capital cost estimate was back in November 2022 at a whopping 1.6 billion Aussie.
And chuck a 2 on the front of that.
And there's been commentary about that number expected to escalate. and like why so expensive? Like that's like how many mining projects do we talk about that are like that expensive? Like very, very few. But why so expensive? Look at where it is, right? Like that is literally in the centre of Australia. It's like 100 odd kilometres.
Australia's rectum.
Yeah, in Northern Territory. Like it's like it's near Alice Springs there, just 100 kilometres north. It's like literally like you throw a dart at the middle of Australia, and that's where this is. And it's not as simple as like, okay, you're going to mine it remote, and maybe you'll concentrate it on site, and then you'll haul or send the con by rail or whatever to a port and then overseas. That's what you'd think, but no, they're not going to do that. They're going to yes mine it on site, but then they're going to concentrate it on site. Then they're going to they're basically going to put it through a cracking and leaching sort of facility similar to what Linus has just built in Kalgoorlie, and then they're also on top of that going to separate the rare earths in a separation plant, which is kind of what happens in Malaysia for Linus and will into the future as well. So all of this they want to do in the middle of Australia there. Serious like chemistry set sort of expertise right there in Alice Springs, mate. So
I can nearly guarantee there's no regional synergies.
And that's why it's such a big capex. Like it's just like there's heaps of vertical integration all in middle of buttfuck nowhere is the plan.
Yeah, right. That's where you'd do the old saying, "Going to dig a hole to China." Be the bloody where it's got to go after that. Yeah,
but the project has attractive kind of grade from an NdPr perspective, etc. So anyway,
I think if you looked at, I think I went over it before. Like Mount Weld really sits. It's the standout.
Killer.
You've got everything else, but Nolan's is sort of right in the middle of there. So it is. I think it's 2.5%. Trio, so it's like substantially above like the other players on the ASX if you take Linus out and Mount Weld.
So like why else? What are the big reasons why I didn't expect this, and I still can't really understand it, to be honest. Like granted, the debt is still conditional, and there's plenty of reason to be a bit uncertain about that the whole package will come together still. But I'm baffled for the following reasons. Number one, rare earth prices are in the dunny big time. Like how often do you get project finance? Like when at market bottoms, it's usually the other way around. It shouldn't be, but it usually is, right?
That's actually not bad.
Which has been our two stories today.
Yeah. Number two, the Australian government already gave Iluka that big free kick for Eneabba with a $1.1 billion non-recourse loan out of that critical minerals facility already. And number three, that project, Eneabba, has already endured an 80% capex escalation versus when they announced FID on that. And Iluka has publicly stated they are asking for more money from the government to get Eneabba over the line, given that escalation. So it's a pretty bold position, for the government to back another rare earth project that in all likelihood is going to be super susceptible to capex blowout, just given the geographical location and the technical complexity of it.
There's not certainty that one gets filled either. In terms of feed.
Yeah.
So
I mean, the FID was announced just off the stockpile base case, but you're right. The capacity is going to be.
It could have been interesting to see if they'd looked at plants nearby that could have gone, not plants, projects nearby that could have gone to support the sunk capital that they've already put into Eneabba.
Totally. And how often do you, and I think in the case of Iluka, how often do you see, like an FID announcing a project for a niche commodity where they, like A, the capacity wasn't filled, but B, there were no offtakes in place for where that product is going to go to once it's produced. Because the reality is they all go to China, and you can't say that. Blah blah blah. So, and I think Arafura is going to have the exact same obstacle. But they actually do have some offtake in place for non-China. But they're not at their target yet on that front.
Yeah.
I mean, I asked for a comment from a few people just on this one today, and I got this funny quote back. The government always manages to find weird and new ways to disappoint.
I'd love to know who said that.
But look, I probably echo that sentiment. Arafura shareholders today won't be disappointed though, and those Arafura shareholders happen to include Gina.
Yeah, it would have been interesting to actually have a chat with Kingsley Jones. He's been on the record as a quite a deep thinker about rare earths, and he's not afraid of sharing his thoughts on government policy, in particular with a sort of strategic and defence lens to it. So he might be one to chat to again.
Mate, we've got a big interview dropping tomorrow, and that bloke, who is well known, is heavily researching rare earths, he says. The big fella himself. Stay tuned. Mate, JD, on the back of your comments about copper and refining charges, copper has gone up.
Yes, it was on the back of those comments.
You have a market influence.
Yeah, it wasn't at all to do with the Chinese smelters actually cutting production.
So it cracked $4 a pound overnight. So
Is this your watch list, Matty, that I'm looking at?
yeah, I'll just
Mate,
bloody
that is-
sorted in ascending order.
It's
There's
just green everywhere.
yeah, I know. There's a lot of bloody companies that aren't worth a mention on there. But I guess, look, 29 metals up 18%, Sandfire up 7%, Develop and Evolution up 6%.
Yeah.
Mate, as we talked to Cav and Rusty, bloody above $4 a pound. That is good news for Develop, Turn and Woodlawn back on. So
Yeah, Sandfire's the big intriguing one. They've got, they're so levered to the copper price, like a few other copper players out there. But
Sandfire?
what did I say?
Sandfire,
Sandfire? Is that what you mean?
Yeah, Sandfire.
Yeah.
They're so levered, so their earnings, respond so well
Yeah.
to 6% jumps in the copper price.
Yeah.
It's it's a very good sign if you're a Sandfire holder.
Righto, we've got Monty Dwyer here for the weather update for Channel 9. What's going on? She's been pissing rain a bit on the goldies, JD.
Everywhere. So updates from Gold Road as well as Westgold. So last time we spoke about Gold Road, they were actually talking about troubles that they'd had, and they were pretty vocal about their lack of happiness with the performance of Macca, their contractor there. So those issues have subsided. They said they've got people in. Remember, Macca is a contractor at Ravensthorpe as well, so it seems that they've been able to find the people to fill those voids. But then
they'd be pretty unhappy with it. There'd be trucks sliding around everywhere. It's not Gold Road, it's Gold Slippery Road.
Old Slippery Road. Well, they're not even the operator, so it doesn't matter too much for them. But they have said to alleviate the concerns of shareholders that they're still going to meet their yearly guidance, and that same goes for Capricorn, who we spoke about a week or so ago, and Westgold as well, although all of them had said they're going to come in at the low end of production guidance and at the high end of cost guidance. So, all sorts of varying issues centered around the same thing. Westgold said that flooding, wet ore was impacting the throughput rates. So a lot of them were relying on stockpiles and lower grade stockpiles to chuck through the plant, and that it obviously caused lower ounces to come out the back end. And it just made me think again of the old Saracen model of under-promising and always beating, expectations. So if you do that, you build in a bit of a buffer, a bit of a cushion when inevitably things go wrong during the year, and you can always exceed the market's expectations. So,
and the beauty of having low-grade stockpiles, because, geez, if you don't have them, they would have been stuffed. So
absolutely, mate.
God bless the low grade. Mate, Glencore, bit of article drop this morning on numerous news outlets about Tribeca going activist on Glencore.
Mate, it's everywhere. It's
The
like
big
Reuters,
dogs.
Reuters, AFR, like FT, mining.com, the Australian, Bloomberg, like this thing was just picked up all at the same time at all of these places. Like activism.
I love a bit of activism. This is fascinating, especially when you look at the sort of comparative sizes, and it seems like they're trying to get a few investors to bandy together because Glencore is a big company, and traditionally you need a pretty decent sized stake to cause a bit of a ruckus. That's why they're trying to bandy together and make something happen. The last time we spoke about Glencore is when they tied up the deal to buy the coking coal assets off of Teck, that's known as Elk Valley. And then what they were planning to do is spin off, quote unquote, their dirty assets into a coal co that would be listed in New York, and then have the sort of remaining metals co. So Tribeca had this document they put forward with 4 key recommendations to unlock value for Glencore. And I'll just go through the 4 of them quickly. Firstly is obviously, like I said, to retain the combined business. That would lead to the cash flows from the coal business funding the transition. It's the zinc, the copper, and all the other base metal assets that they have. And then you got number 2, which was moving the primary listing to Australia. So BHP did a similar type of thing. They cleaned up their their London listing. They brought it here and they saw a bit of a re-rate. There's a bit of a comparison made with Rio, whose overseas stock trades at a discount to its ASX stock. So these guys highlight that, and they say that the ASX is the natural home for a mining company. The third point is to amend the capital returns framework, and this really ties hand in hand with becoming an ASX-listed company because of our more accommodating franked dividends policy.
Yeah.
It would be better to emphasise dividends as opposed to buybacks if you're an ASX company.
Yeah.
And then the fourth point you've got is to sell a minority stake in the trading business. Now, this is an intriguing one. The trading business has traditionally been a real money earner for Glencore. It's what they were for a long period before they really moved into being a miner as well. And I think the read through there is to help people appreciate the premium value and the premium nature of their trading business as opposed to other trading businesses. It's been sort of
because you'd have a see-through multiple on that.
Yeah, exactly. I mean, it's been made aware to us, in the past, the nature of Macquarie's commodity trading business. And
oh, mate, that is what Macquarie is now. It is literally a commodity trading business.
Exactly.
Dressed up as a bank.
Yeah, and if you can help the market appreciate the value and the profitability of a trading business, like trading businesses are traditionally capital intensive and they haven't always attracted a premium multiple because of the volatility in the earnings. But that is a method that they see in which people could really appreciate just how good a business that is. So last thing
they were when they bought Xstrata? Was that sort of their first leg into mining?
I don't know.
I think it was definitely one of the first things.
Yeah, there'd be a long history, I'd imagine. Because
that was
if you're a lender or an off-taker or whatever, then naturally there's going to be occasions where you end up owning the asset. So
I think that was one of their first big plays. Don't quote me on that. To get into becoming a miner.
That's far and away the biggest. But they had owned mines prior to that. But it was a sort of a bit of a gradual change from the early 90s when they changed from Mark Rich and Co. to Glencore. And
the old Glencore strategy, mate, was lend to own.
Yeah. I don't know if old Ben Cleary was over at the Rottnest little fest, but I'm disappointed he didn't pop into the office and come and let us release this story, boys.
Oh, mate. Yeah, we love shareholder activism.
Benjamin, my good friend, if you're listening, we'd love to have you on the show tomorrow. You just get in touch, Cobber.
We'd love to be the home of activism. So you got any
it's right up our alley, Cleary.
Alrighty.
You just give me a buzz,
Don't
Cobber.
be a Mike O'Mara of Bell Rock Capital on Whitehaven, mate. do better. Put your voice to it.
Ricardinho, you've gone down a little rabbit hole here on exploration targets. So we've seen them lots recently. They've been pretty hot. I think Azure is the go-to. They really started the craze. What have you come up with here,
mate? You guys have been noticing this, right? Exploration targets. They're the new maiden resource, the new inferred resource. It's like exploration targets.
That's one way to put it.
There's a big rise in them. And yeah, famously, like you said, Azure, and that was enough for SQM and Hancock to gobble them up. No JORC resource on Andover, just the exploration target.
The companies have obviously found something that the ASX lets them do in exploration.
Yeah, I mean, and whenever you see them pop up, they actually say, like in accordance with JORC 2012. Now, that is not the most recent JORC. I have a suspicion, I haven't confirmed this from asking, but I think JORC are getting like more and more, like it's getting harder and harder to just put an inferred resource up.
I think from what I'm hearing that your resources, it's heading towards a resource nearly having to be a reserve to release it with the updated JORC.
Maybe this is the way people are trying to get around that by still keeping the market excited. Anyway, look, I've been noticing a bunch of these pop up. The first, two big ones have sort of popped up on my radar, and there's probably a whole bunch more out there. But the first one that popped up on my radar this year was on the 23rd of January, Southern Cross Gold. So, on that day, they came out with this exploration target of 1 to 1.6 million ounces AU equivalent, grading 7.2 to 9.7 grams per tonne for their Sunday Creek project in Victoria.
They've got antimony there too.
They do, so that's where the equivalence, I think, comes into it, yeah. And the second one was the mighty Spartan Resources, ding, ding, ding for JD, who still owns shares in this one. On Tuesday, they popped up with this exploration target for never of 1.6 to 1.9 million ounces, grading 5.8 to 6.7 grams per tonne. Now, look, I don't know what to make of this trend with exploration targets popping up everywhere, and my natural inclination is to be sceptical of these sorts of numbers popping up. Will investors treat them like an inferred mineral resources? Do they end up anchoring to these numbers which have a lower level of confidence than even an inferred resource? These are the things that go through my head, right? And what assumptions are even used to come up with these exploration targets? At face value, it rubs me the wrong way, but. Over the weekend, I was watching the recording of the Resources Roadhouse conference.
I would not have thought you'd watch that, Trav.
Someone linked me a thing. Anyway. Okay, anyway. You know the one held in Freo a month ago? I was watching a few presentations on day 3 where both Southern Cross and Spartan Resources were presenting. And I want to play you guys a few brief clips. The first one is Michael Hudson of Southern Cross Gold. And I'll play that one for you now.
So you can see some very impressive grades without a doubt.
Is that what
but
I think it is?
What does it all mean? What have we actually got here? So let's just take some of the numbers off that maybe you've read. And let's make some assumptions. Let's take off these veins here underneath this old mine here where we haven't got much information. We stepped off here, so we don't really know much what's 500 metres down here, but we know the system continues. We hit very high grades down there. But let's extend these veins down to the depth here. So what does that look like? That looks like this. And this is our exploration target that we just put out over the last week or so. So it's the first attempt at quantifying what we've got. Too early for a resource, but 43 kilometres of drilling.
That was pretty cool, right? I mean, look, if you're listening to the audio and you couldn't see that, you won't be able to completely appreciate it, I don't think. But Michael used VRIFY right there to brilliantly explain to a dummy like me the basis of that exploration target that they put out. In those 40 seconds, that just 40-second clip, with that imagery, I could visually appreciate the area of the ore body, that they assume extends deeper. I can see the drill holes where the ore body is closed off. It's brilliant, and it completely contextualizes what is otherwise a really weird number in the context of these junior mining companies, this vague exploration target. Second one. Now look, the second exploration target culprit, Mr. Simon Lawson, he only released the exploration target after the RIU conference. So I'll let him off the hook for not doing as good a job as Michael in steering the VRIFY model, but I'll play a snippet from his spiel too.
Zoom in a little bit. You can see the infrastructure that's in place. Right through the Gilby's pit there, the biggest pit on site. That is a conceptual pit design just to the right-hand side there. Sorry, I'll just draw on there. That's the never pit conceptual at this stage. But this is the process plant.
Good on the tools. So that's pretty. I think that's cool. Some people who knock Spartan, one of the things that they point out is that never runs beneath the waste dump, and in that bird's eye zoom magic thing going on, it's pretty great to see the proximity of those different things, right? You can see the conceptual pit, you can see the waste dump, you can see how adjacent they are, and then it can even pan below surface, and you can see where the ore body runs in relation to all of those things. So my takeaway is that VRIFY ultimately kills unnecessary cynicism from people like me. I will assume the worst.
Yes, you will.
Almost always, mate. Guarantee it. I will assume the worst. I will assume you're hiding something. That is how I'm wired, for better or for worse. That's how I'm wired. And but like, if you show me the truth on a VRIFY model, I'll probably come around. I can be persuaded if in like 3D graphics, you're not hiding anything. It's like it's there to see, and an exploration target where I'm skeptical can be explained so beautifully and simply with the VRIFY model. So, but if you win me over, mate, I've just got one message: just don't win me over, and then follow it up with something like this.
And then we use the Burj Khalifa. So the world's tallest building. I'll cop some grief for that too. That's fine. Over 830 metres vertical to the base of that building, and our deposit is on its way past that depth. So
Simon. Anyway, hit up Grant at VRIFY.com if you want me to stop being cynical of your ore body.
So pretty much, if you get a VRIFY model, Trav is going to put his life savings into your stock.
No, definitely not. Definitely not. But
there's a chance.
But it's just, I'm a big fan of the way a dummy like me can kind of, make sense of these abstract, geological assumptions in a way that is like very, simple to appreciate.
Oh, but hey, Trav, don't knock your boy's mining knowledge after hanging around with me 5 days a week for the last year. Mate, yous are coming along.
What's paste?
I'd say that my finance knowledge has got way better than your two mining knowledge, put it that way. Right, Syrah, capital raise. What's going on?
Another one. 8 in 9 years, Matty, over $1 billion raised. So, when you see that they've got a market cap of 475 million prior to this raising, it's pretty startling. So this time round, they're after $98 at a 21% discount. And very importantly for them, it wouldn't happen without them. They've got the support of Aussie Super. So they're going to go from 18% shareholders to 32% shareholders. In the process of taking their pro rata in the raising, they are converting notes at a price of 67 cents. So they could actually own up to 40% of Syrah if all the notes that they still have outstanding convert over time.
Jeez, I've got me super with them. I'll be watching the graphite share price now. Jesus Christ.
So hopefully you are nice and diversified across your holdings there.
Yeah, just what am I? The
growth?
The diversified index one, like the boring one.
Yeah.
Straight from the barefoot investor.
Good stuff, Matty. So the balance sheet at Syrah will be looking a little prettier at the expense of shareholders after the raising today.
Sounds like a familiar story, mate.
They've got quite the knack for capital raising, and it is definitely a factor in them being one of the most shorted stocks on the ASX. Last number that was reported was 16.2% of the shares outstanding had been sold short. So this, as we know, can play a big role in how capital raisings are executed. So if you guys remember, about 6 months ago, we spoke about 29 Metals. Now, they sought $151 million via a accelerated pro rata non-renounceable entitlement offer. So a bloody mouthful. But essentially, they offered the stock that they were going to newly issue to existing shareholders. Now, of course, beforehand, they would have firmed up support amongst their register, and it helps having, I think at the time, EMR 40 plus, maybe 45% shareholders. So Syrah have tried to do the same, but they can't execute it to the same extent because they don't have that same support. So of the $98 that they're raising, 37 is going to come via a pro rata accelerated non-renounceable entitlement offer.
And so non-renounceable means they can't transfer that right
Correct.
to another holder?
Yes. So that leaves a remaining 61 million to come in the form of an insto placement. And I've got full confidence that a lot of those shorters will be going in there. They'll have the ability to exit their position by buying into that insto placement.
And is that insto placement going to be at the same discount as the entitlement offer?
They're both being done around 55 cents. So yeah, the ones I think one for 10.2, and the other one's at 55 cents. Yeah,
but yeah, that like the relative proportions of the two is pretty interesting. When you do like the placement combined with the ANREO, you get an uplift in placement capacity, which allows you to do more of the placement. But that's the relative proportions of each there is obviously to your point. This is like a short sellers are closing out their shorts.
Yeah,
don't own the stock.
Absolutely. So looking at Syrah taking a step back, the company has yet to return a positive operational cash flow year in their history, which is pretty tough to look at. They've just been a money pit since Balama came online. But, I mentioned before, they've just got this capital raising prowess. They continue to get supported. They've raised over $1 billion, and that is despite being fully funded in 2016, 17, 18, 19. They've said it countless times. So there was a bit more positive news recently. A couple of weeks ago, they signed an offtake agreement with POSCO Future M. That's a pretty positive sign. But if you look at the operation, Balama, which by all accounts is a pretty top-notch asset, it's still running on a campaign basis. You've got the Vidalia downstream plant in America, which still isn't qualified. We've spoken in the past as how long this qualification process to be able to sell your product to the the final customer takes. It just takes a long time. So they're not quite there yet, which means you can't get the cash flow that you really want in the door.
Mate, I looked at the investor deck for this one, and I went to the risk section because I'm like, fuck, we've got a money printer, like a money incinerator here. And and they must talk about all the risks. 16 pages of risks in a capital raising deck. I've never in my entire life seen such a lengthy disclosure of key risks in just a capital equity raising presentation, which tells you everything you need to know.
Was there one of the risks we might raise money again?
Oh yeah, absolutely. That's a standard one, but yeah.
Oh,
but it was like
we will likely raise money again.
There was a lot of disclosure about qualification of product in those risks as well, which I recommend graphite investors read in depth.
Mm-hmm.
Yeah, it's a huge risk. So I keep thinking, like, why do investors keep backing this company? And I can't help but think about the sunk cost fallacy. So, essentially you're just throwing good money after bad. And I'm not explicitly saying that that's what's going on here. It just is something that comes to mind. People find it hard to walk away once you've invested so much capital into a project. And these biases have a funny way of influencing people's decision making, even when you're totally aware of them. They still play on your mind. So I'm sure investors in Syrah and similar companies don't need any reminding that this is a bias that plays on the mind of all decision makers.
It's the combination of that, absolutely that, and it's like I think there's two other human factors at play as well. One is just the seductiveness of sunk infrastructure. It's like which is again the sunk cost fallacy, but it's also attractive to be like, there's all this infrastructure that can be used if we can just get things right, which I suppose they're related. The other one I think too is like, I've seen this play out before when back in the banking days and you'd be advising on the sale of something out of administration and there's a lender group and all of the individuals who are who have signed off for their various institution saying that and committed all this money, they're going through the process. They you can feel and sense the pressure that those individuals are sometimes under to their respective investment committees because they've signed off on this already. And it's a far easier thing for those individuals to do, to tell a story of it just hasn't worked yet because of X, Y, Z, rather than say I was wrong.
Yeah.
And that like if you do that, you go back to your investment committee and you say that instead of saying I was wrong, you might keep your job for longer.
Yeah,
but you also might keep torching more money.
Yeah, I think you're dead right. And like to be balanced, I can't disregard the potential that Syrah does work sooner or later. But I just keep thinking, we've spoken about it so many times, just how hard graphite is. It is so hard, and from the the upstream to the downstream to the fact that the market is so Chinese influenced, it just remains so far in that too hard basket for me that I wouldn't do the work to get all the way up the curve. That's why I'm not going to completely disregard the opportunity, the potential that it does work down the track. And I mean, to sort of put a bow on it, I mean, they do have shareholder support, which is massively beneficial for the company. And beyond that, as we spoke about at the top of the show with Arafura, they've got government support, and that can't be understated in a critical mineral, especially the US government, who have pretty deep pockets.
Oh, sorry, I thought you were talking about Aussie Super when you said government.
Very good, mate. Alrighty.
I was thinking it's funny why graphite is like 1 to 2 on the hardness scale out of 10, so it's actually very soft.
Yes.
So you wouldn't think it'd be that hard. Whereas diamond is the allotrope of graphite.
Carbon,
allotrope of carbon.
There we go.
Just a quick Google there.
Good work, gentlemen.
Love your work, boys. Great as bloody always. Mate, sensational ad for VRIFY, Trav. That was from the heart.
Yeah.
That was from
educational.
the heart.
I'm wearing the hat.
Yeah. That's like wouldn't even say it was an ad. Like it was just seamless.
Thanks, mate.
That's a 9 out of 10 from me, mate.
Cheers,
well done. Mate, we also want to thank, who else we have at the top of the show?
Anytime
Exploration, getting Liontown out of the shit. Well done, Seamus Murphy. Mate, GetWet Solutions, DSI Underground, Smec Power and Technology, KCA Site Services, Brooks Airways, and K-Drill.
Hooteroo, money.
Hooteroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.